Finance. I'm glad that you're with me today. We're going to start it's not an awfully long video, but we're going to start working on a new feature in these financial statements that is going to save a lot of time, a lot of heartache, and probably to a large degree help people do something that they just weren't bothering doing before. So there may actually be a little bit more work that you have to do, but you will be for the first time getting things the way they are supposed to be. The very first part of this video has to do with giving you the theoretical background in case you have missed it. What I mean by that is this has been something that has been widely debated within the Sun Plus network. In fact, when we had meetings of a lot of the Sun Plus implementers in Thailand back in 2013, we talked and talked about how to solve this problem. And over the years, we have had several shots at how to address it. It is interesting that at the meetings in Thailand, the team from Inter-American Division did suggest a solution, which me being sort of a skeptical person, I didn't jump right on it. But actually, what they suggested, with the refinements that we've added to it, is what we are learning now, what we're implementing with these latest financial statements. So, the Inter-American Division creative thinkers over there came up with a pretty nice solution, and then Siri, who makes our financial statements, uh, worked uh, and implemented their idea in such a way that it's just beautiful. And so that's what we're learning now. And so just to make sure, if you've been asleep or something, maybe you've been ill for the past 4 or 5 years, and you missed the theory, the problem we're trying to solve, this very first part of this video is going to show you the theoretical problem we have. The problem starts with the notion of related party transactions. If you, back from your intermediate accounting class, you learned that you have to separately disclose related party transactions. The accounting profession is not in the business of saying what a company can do or not do, but we are in the business of reporting that information in the financial statements. So a company could a public corporation could loan its founder, the founder of the company, inappropriate amount of money, and the accounting profession doesn't say they couldn't loan them the money. But the accounting profession does say, since this is a related party transaction, it has to be shown separately. Okay? And basically, receivables or revenue or even expenses that are connected to related parties, because they're not really arm's length, the whole transaction could be questionable. Maybe not, maybe it's not questionable, but that's to the managers of an organization to decide. But we report it separately so that the people that are making these types of decisions have the information they need. Well, for a mission or a conference or division or GC even, the accounting manual defines what it is not an exhaustive definition, but it does define related parties for us in a practical sort of way. So, for example, if I am a union, the division above me is a related party, not other divisions and not the general conference, just the division above me. And if I'm a union, the conferences and missions and institutions inside my region are related parties. Whether you agree with that or not, the accounting manual does the favor for us of defining that. And so just to show you how that works, here on the screens are the sample financial statements. And you can see down here in the notes, Let's see if we get down to it. Okay. And the first note related to receivables. Okay, I'll get to them. Receivables. The accounting manual illustrates here the separating out of the receivable from the next higher organization, from receivables from organizations within the territory, and from into other denominational receivables. These two groups, the organization above and the organizations below, are to related parties, and they have to be shown separately. The same thing is true with loans receivable, not just accounts receivable, loans receivable. They have to be separated out in the same categories. The organization above, so if I'm a union, this is the division above me, okay? And if I'm a union, this is the organizations within the union. If I'm a mission, it's the union above me and the organizations within my territory, for example, the academy or the church schools or something. So those have to be shown separate, and they are shown separate from other denominational receivables. The other denominational receivables are exactly that. They would be receivables from organizations outside of my division or outside of my union, so to speak. And so that functionality that you see there is accomplished by setting up address record A00000, and you saw the video or should watch the video on that, and that's the logic behind that. Well, the accounting manual further describes the administrative employees as being related parties. Okay? An administrative employee as a quick rule of thumb, if they are a board member, if they're on the executive committee, they are related parties. So if we have a receivable from any board member, that needs to be shown separate from other employee receivables. Okay? So, obviously, the president, secretary, and treasurer are usually board members, and so they would be administrative employees. But also, any department directors that are on the executive committee, anybody that's on the executive committee is a related party and termed in the accounting manual jargon as administrative employees and has to be shown separately. And for you that like to get the details right, like to have all the details, vice presidents, even if they're not on the executive committee, are related parties. Okay? But so there are also administrative employees. So to be precise, any employee that's on the executive committee and all of the vice presidents are administrative employees. And their receivables have to be shown separately. So you can see it right here, how the administrative employees are broken out separately or shown separately, their receivables from the other employees. Likewise, you could see the same thing happening down here in housing loans. Administrative employees being shown separate from other employees. And I'm very clear on this with the authors of the accounting manual. You would do the same thing with employee car loans or employee education loans or any other loans. And the accounting manual doesn't illustrate it. And so the assumption behind the illustration you see in the accounting manual is all of these other loans have no administrative employees, which is pretty unrealistic. So you would have this type of breakdown under every category of loans. If you have a loan from an administrative employee, it has to be shown separately. Likewise, in the accounting manual, we have the note over here on the compensation for administrative employees. Basically, this note gives us uh, 2 bits of information for 2 years. So 4 things. It gives us the total employee-related expenses, okay, the total employee-related expenses for each of the 2 years in our financial statements. So that would be all of our 81 accounts, okay, salaries, benefits, allowances, insurance, and so forth. But then we also have to break it down. We also have to give the numbers of the total employee-related expenses that are connected to our administrative employees. Okay, this is uh, the this is slightly complicated, and you want to get it straight. Okay, this is the amount paid to administrative employees while they are administrative employees. Okay, so if John was the president for January, February, and March, his 81 accounts would be in this figure. And then Tom picked it up, let's see, January, February, Tom picked it up in April, May, and June for the rest of the year. Those 8 months on Tom belong in this figure. So John for the first 3 months as president, and Tom for the 8 months that he was president. Okay? And so that's a little bit of tricky. A lot of people aren't real clear on that. So these are the amounts paid to administrative employees while they're administrative employees. And to make sure you see the contrast, these numbers over here in receivables, these numbers in receivables are receivables from employees, administrative employees, at the balance sheet date. So there's a conceptual difference. This 1,439,263 are the administrative employees' receivables at December 31st, 2021. Okay? And this 1,644,868 are the receivables for whoever was the administrative employees at 2020. All right. So if Tom were maybe I should use different names. If Fred was the president on December 20th, and then it changed on December 20th to be Jerry, well, Jerry's receivables go here because on December 31st, he was the administrative employee. Okay, whoever is the administrative employee at the balance sheet date, statement of financial position date, whoever's the administrative employee on that date, that's the receivables that have to be shown. So you see the difference. Here you look at whoever's in the office at the balance sheet date and show their receivables. And over here on the compensation one, you look at you total up their compensation while they're administrative employees. So it's really 2 different mathematical processes you have to go through. So those are the accounting rules that we're struggling to comply with, and just let's take a peek at the way our financial statements deal with them. Okay. And so here you could see the related party organizations, SDA entities. This is the SunPlus financial statements. You could see the SDA organizations within the union being shown separate from other receivables. And here you could see administrative employee housing loans separated out from non-administrative employee housing loans. And you can see right now, it's because we haven't done what we were supposed to do yet, we're not showing anything. If we haven't done what we're learning in this video, and so it's still showing as 0, as if we have no administrative employees. Okay, we theoretically, at least when we're done, we will have numbers showing up here for our administrative employees. And so we have that for every type of employee loan. Administrative employees, non-administrative for car loans, educational loans, furniture loans, and any other loans that we come up with. Okay? And then over in the compensation, and so I don't want to overdo this, but the administrative employee loans, the figures that are going to show here will be the administrative employees on the balance sheet date. Okay, so they might have only been elected one day ago, but if they're in the position at the balance sheet date, their receivables for housing loans will show there, and their car loans will show there, and so forth. And likewise, or contrary-wise, over in administrative employees, this is our footnote for administrative employees compensation. So this figure here would be total of all the 81 accounts for each of these periods. Okay. And then this is going to be the total compensation paid to an administrative employee while they're administrative employee. Okay. So the department representatives, the representative on the board from the department heads, the personal ministries director is Mary. She was there for 4 months, and then she rotated off, and Tom picked it up over in the education director. He rotated on. Well, Mary's salary goes in for 4 months, and Tom goes in for 8 months. So that's the theoretical background of what we're going to do. And now the next part of this video is going to show you how we have the system that we have created to help us do this. It's an aggravation, but it is simple. It's something you have to do, but it's not hard to do. And so just stick with us, and let me change things around here. Okay, the very first and actually the only implementation step is to create an account. It's so simple. All right, just to make sure that we're working together on this, if you look at the site where we put the videos, put the financial statements, you will see a document called 2018 Financial Statement Implementation Instruction. They all should be something similar looking as this, should all be there. And so we'll just click that, and this is the instructions on how to implement. And so the very first thing it talks about is setting up account 0000000, which I think everybody has that now. It's been around for at least 10 years, but it's instructions in case you don't have it set up right. And then address code, setting up address code 8A000. This helps us get the related parties organizations, the organizations above us and the organizations below us isolated out so they can be shown separately. And then the third instruction is one that we're following right now, and we need to create an account with these attributes, with these values, and it's just simply creating a new account. So it's very simple. We're just going to flip back and forth. We go to chart of accounts. Everyone here knows how to create an account, and we're just going to follow it exactly. So it's a matter of cutting and pasting. All right, we're going to do that, and we're going to come over here and paste it. And go, okay, create a new account. Yes, we'd like to create it. And the very first thing we're going to do, we're creating a memo account. Now, let me remind you what a memo account is. There's a full video on memo accounts, but just in case you missed it, a memo account is very unique in that it does not enter into the accounting trial balance of the organization. So it's useful if you want to keep track of information like your membership numbers or your pieces of literature turned out or handed out, or keeping track of anything. The General Conference uses it in its investments department to keep track of its the interest rate used for their some sort of money market accounts or something. I don't completely understand what they're using it for, but I just simply put the interest rate in there and each day, and that's the interest rate that is being used in the calculation. Okay, and so we want to change the account type to memo. Okay, and so the beautiful thing, and you're going to see this in a few minutes, is that a memo account, the normal rules of debiting and crediting are out the window. So you can debit a memo account. And so the entry would be debit the memo account, 10,000, and that's the end. There's no credit. It doesn't need a credit. You can write in a credit to the account or debit it, and it doesn't need to have a balancing entry. So it's a little oddball thing, and you're going to see it working in just a minute. Okay, but the important thing is to get that changed over to memo. All right, and we just work down this thing here. And these are Siri, and I'm very happy for him to have done this. This is Siri's, let me get this thing back like it was. All right, and this is Siri's little setup here with the titles, and we, just to be cooperative for his hard work that goes into making these things, we're just going to follow it. There's no reason to fight the core design. I mean, let's just go ahead and we're just going to copy that. I see I have picked up the quote marks. We can live with that. And so this is going to be here. All right, administrative is the lookup code, and we'll put administrative, I believe, is the all right. And then the next instruction here is very simple. We want to set the default currency as to be the default currency of the organization. All right, so we'll come over here to the setting up of the account, the currency, and so we change the default currency to be the default currency of our organization. My sample database is USD1. All right, and then analysis details, and the class, we change the class, is going to be a Z to indicate it's a memo. Okay, memo account, and we're good to go there. And then we're going to set the requirements following our document here, that mandatory fund, function, and who are mandatory, required by this memo account. So we go fund, function, and who are mandatory, and we're good to go, and we go OK. All right, and so we have the mandatory, fund, function, and who, and we have class there, and just double checking that it shows memo there. Very important, and we've got it. Okay, and so that's all of the setup that has to be done. We're done with setup on this particular function. This is not done setting up the financial statements just on this project that we're working on, this one aspect. And so now, so it's simple. It only takes a second to set up this account, and if you're implementing a new organization, this account should be there in core, ready to go. So now, and so you wouldn't even have to do anything, but there's a little bit of training that you have to do for the organization, because the accountants at the organization need to write an entry every month telling the system who the administrators are. And so that's the remaining of this video will be explaining and illustrating that. Continuing with this is I want to spend a moment just sort of setting the scene. And so I've run in my sample database reports and Q&A, and this is all of my employees receivable as of January 31st. So I'm locking down, I'm preparing I'm getting ready to do the January 31st of 2014 financial statements. And I need to keep that in mind. That's what we're talking about. And so on January 31st, and so I think what I'm going to do for this class example is I'm going to do January and then I'm going to do February. Two separate examples of what needs to be done at the end of every month. Mostly I'm doing 2 months so I can demonstrate how that this is working correctly. Here is the employee loans for January 31st. This is the employee loan balance on that date, on that point in time at the end of January. And here's the employee compensation for January. Okay, so this is what the folks were paid in January. Now, what we want to do is just grab a couple people here and grab them figuratively, not literally. And I'm going to say that Boris and Enrica are on my executive committee. And I would like to just get a house loan here, just so we can see it working in house loans. And that Robert Jenkins is on our executive committee. So what we'd like to see is that after we're done doing this process that I'm describing, is that this 50,000 be shown separately from the other loans, okay, other car loans. So the total car loans are 200,000, but we would like to have 50,000 shown separately for administrative employees and 150,000 shown for other employees. And down here for house loans, the total house loans are 905,000. 375,000 would be shown under administrative employees. And so during this month, Boris, let's see if he is here. Boris is right here. He made that amount in January. Enrica made that amount for January. And Robert Jenkins, if I can get him, wherever he happens to be, right there, made that amount. And so those are our 3 administrative employees, and they're enough for our illustration. All right. Now, one thing I needed to point out, and I could have done it a little bit slicker a few seconds ago, but let me just do it right now, is that on our employee loans, we, of course, are debiting and crediting their account. This is not going to be a class to account for employee loans, but I will mention to you that this entire process assumes that you are following our standard employee loan recording process. So if you don't know it, you need to get the video or get someone to explain it to you. But when we are debiting and crediting the employee loans in 253, this is also true on employee accounts receivable, we are going to record who. Now, a lot of people cut this off or bypass it or ignore it, but it is very important. I mean, because they say, well, they're the same. We've got the account number there and we've got the account number there. Why do we need who? Well, we want to be able to track down what an employee owes us, no matter where it is on the balance sheet. And so if employee is leaving and we want to collect all the receivables, we don't want to go looking around for their loans. But this system we're describing here is built with the assumption around the idea that employee loans have a who connected to them. Okay, the name of the employee that has the loan. So if you haven't been doing that, you need to use account allocation. It's very simple. Go to this account, open all their transactions, and put their who on to all of the transactions. It will take you 10 minutes for every employee that has an employee loan or less, because you can cut and paste the who and just cut and paste one after another for each of the transactions under that employee. Okay, so to remind you what we want to have when we've done it right is that we want these two loans, these 50,000 to be shown as receivables for administrative employees under car loans, and this 375,000 to be shown as receivables of administrative employees under house loans, and we want these three amounts to be showing as compensation for uh, administrators. And all that I have described here is to help you understand the environment. We haven't talked about any work you're supposed to be doing. You're not supposed to have done this report and be highlighting it the way I'm describing it. No, 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 no. I just have done all of this description here so you understand the world. Okay, we haven't gotten to the thing the accountants are supposed to do. All right, so now we have these three employees here that are administrative employees, and so we're going to go back over to Sun Systems. Okay, let me get there. So the remaining part of this video is to basically show you what the accountants have to do at the end of every month. And the beautiful thing about this is that if they don't do it, the financial statements will be wrong. But if they miss doing it, they skip it or forget, they can go back if the period is open. They can go back and do it and remedy the oversight. So it's not I mean, it needs to be something done. So as of the last day of the month, they need to do this so they can do it on the 10th, just right before they run the financial statements. They do what I'm about to show, so in the middle of February, they're doing January's financial statements. They go ahead and run this for January. Okay. And so let's go ahead. We're doing January now. And so it's done with ledger entry. It's just regular ledger entry. Okay. Let's see what this is all about. All right. And we do a JV. It works. I think it worked with almost any journal you have. Okay. And we're going to have some standard transaction reference like admin, employees, January. Okay, you really don't need to say because in a minute we're going to put a period. Okay, and so our transaction date, I guess, would be in theory, all right, the 31st of January 2014. So let me just get back to that. I know you guys know how to do it faster than me, but there we go. And so that's our transaction date. And the accounting period needs to be 01 2014. Okay, that's my class example. We're doing this for January, and we're going to do February in a minute. And then we're going to use this account we just created. Okay, and don't be confused by this second one. This second one down here was me playing around. This is the one we just created. And we go okay and okay into that. Whoops, sorry, a little bit too. And you could see that function, fund, function, and who are required. And so we'll grab the function that this person happens to be in. And I'm just making this up right here. I should have looked it up first, but we're recording the fact, just to make sure you understand what we're doing, we're recording the fact that Boris is an administrator, okay, an administrative employee. And so let's say Boris is the president in January, okay? And so we'll come back over to that, okay? And so Boris is the president, I believe that's what I said, and so there we go. And so now we want to get the who for Boris, and let's see if we can spot this real fast. There we are right here, the who for Boris, and we are all set. And this is very important. This is important. Perk up, listen up. All right, we want to record an entry for $1. Okay, and a lot of discussion went into this, and someone said we should use a memo account, and I think we have good logic behind this. Okay, we're going to record a debit for $1, indicating that Boris is an administrator. Okay, one. Now, let's say we recorded Boris as an administrator incorrectly. That is, that we posted $1 into this account, tagged to the who of Boris, and we realized we'd made a mistake. Well, what we have to do is write another entry to the account and just simply credit his account for $1. Everybody that has a $1 balance in that for that month will be treated as an administrator. Okay, so if you accidentally put someone in for $1, credit their account for $1. And don't put $2 in there, because then they're going to get double counted. It's going to mess up the whole system. So we want a $1 balance. It's not an account balance, it's a $1 transaction each month. Okay, $1 transaction each month for the people who are administrators. So if we make a mistake, we can fix it by crediting that who. Okay? All right, so we go, okay. And we could post right now, but it would make a different thing, a different deal. So let's just do the same thing for the next administrator, Z. All right, we're doing exactly the same process we just did for Boris. Okay. The next one on our list, and it's going to all right, the next one on our list is Enrique. Okay. And so we'll go back to the system there. And we're going to do Enrique is the who. Okay, she's right there. And we're going to let her be the secretariat for this. I have no idea where the secretariat is. Got to be around here somewhere. We have vice presidents, but we don't have secretariat. Well, we're not going to worry about that. Let's just call her a vice president. All right. And we go okay with that. So Enrique is a vice president, and we're going to give her $1. Okay. And I believe I am all set with that for January. And we're good to go. And we go new line. Oh, excuse me, it's got to be a debit. And we are recording that she is. She needs to have a debit to her account for $1. Okay. And then our last one is Robert Jenkins. Okay. And he could be the treasurer. All right. So we go back to the system, and we've got a new line, and this didn't carry over. And so we go, oops, let's just do it this way. Okay, and this is Robert Jenkins. If I can find him. Okay, and he is the treasurer. And we go, okay. Whoops. Be careful here. All right, $1 debit. Okay, and we are done. All right, so we have 3 entries in there right now. If we go to, I don't want to mess us up too much, but we have grid view. We have 3 entries, they're each getting $1, and they're the departments, and the who's are here. Okay, and just so you can get a sense of memo accounts, here are $3 of debits, and then I come over here and I click post, and it's almost like magic, and the entry's posted. Okay. It posted, it makes my reports are not working right here, but the JV will come up. and be and printed and goes in the file. This is a real journal entry and it goes in the file in the number to show who has recorded what into this account. So even though it's not quite the same stature or moment of importance as a regular account, we want it's also not trivial of what's been recorded here, and this gets filed just along with all the other JVs. Now, if this, and so that's what has to be done. Now, I know plenty of wise people are sitting there saying, whoa, couldn't we import it? That's exactly right. That is, you can go over and do an import, and I have an import sheet here just so we have something to point at. I can import my administrative employees and the transaction reference I want for January. And so you could see if I've got to do some catching up, I could do a whole bunch of months at one time, okay? And the fund and the department and the who, and I've got a transaction description here just like everybody else, and then it's $1 going in, and it's an import just like any other import. But the beauty of it is, or the cool thing is that this import doesn't have to balance. You can see in my example here that I've got a bunch of $1 debits and I have no credits, you see, to balance it out. Okay, so you just import a bunch of debits for $1 and you don't have any credits because it's going to a memo account. So it is very reasonable for you to set up an import that is done at the end of every month. An import template you save, you modify it by whoever happens to have changed, and just look at the minutes or look at the listing or whatever it takes and just import it every month. I mean, it takes 2 minutes if the board doesn't change that much. Okay, it take a second just to import it just right before you make your financial statements for the period that you're making your financial statements. So you don't need a special template. I'm just looking at our standard current upload template and just let this baby rip. Okay, and it will go right in. So now let me switch gears again. So there, we have gotten the entries done and the work is done. So that's all that has to be done. When the running of the financial statements, there's no special attention needed on this regard as far as the financial statements. You remember in the past where you had to run them twice and calculate the figure and move it over, and I don't know that a lot of people were actually doing it. You know, it was just a big aggravation. Well, now all they have to do is prepare this import template that I just showed you here and run it before they run the prepare the import template and run it right before they do the financial statements, and it's over. So we really appreciated that working. So for what we want to do now, the rest of the video is simply just testing that we have accomplished what we said we're going to accomplish, and also we're going to have in the video a purge and change the entire administrative group and do it for February to show that it is picking it up correctly. All right, and so I mean it's perfectly reasonable. If you don't want to watch February, you don't have to, but it give you a little more practice in seeing the way this thing works. All right, so here we go, and we'll go back over to our financial statements, and we'll run the financial statements. So the financial statements are sitting up here, and we're going to run them. Okay. Whoops, here we go. We go back to design view, and up here in the financial statements, and we run them. And the important part that I need to make sure that I remember is that I change this to January, because that's what we're talking about, and January 2014, and we want to hide the preparation aid, and this is my sample database, so we're good to go. and we run it. Give it a second. This is where I should tell a joke. Okay, and so let's see if this worked. First off, we go to notes receivable. Okay, and you could see it looks like we may have been all right. Here's the housing loan, and if you remember, that's Robert Jenkins' loan. We just take a peek back over here. Robert Jenkins' housing loan is showing there right where it belongs. Okay, and then administrative employees are showing 50,000, and that's the two others. That's these two car loans right here. And we can double check this. Let me double check it for the fun of it. Our total car loans are 200,000, okay? And so we'll take a peek over here, and there's the 200,000, okay, with the right amount. All right, now the big test is we come over here to administrative person. Now this is a little confusing, and you can see here on this page here, this is new for you, just keep it together here. This worksheet is not going to print, but it shows you who and the compensation, what employees were picked up for compensation on this month. Okay, so this is January, and here are 3 employees. So here's what shows up on our report. Okay, here's what shows up on our report, and you look over here at the report, this is what's going to be printed, and you see 18,291, and you say, well, is that right, or who are they? You can come to the worksheet. You see where I'm clicking up here at the top? You go to the worksheet, and you can see who makes up that total. Okay, who makes up that total for January? All right, and so it looks to me that it's working perfectly. So let me take a second, get everything set up for February, and we'll rush through February, and you can see the way it works. Okay, now we have progressed to February. So this is the receivables for February, and this is the compensation for the month of February. This is the receivables at the end of February, and we have the who on all of our receivable transactions. So we have the who's there, and there was a purge at the end of January. There was a purge, and the uh, the previous group, these rascals, Boris, Enrique, and Robert, were kicked out, and Yen Chao and Antonio were put in. Yen Chao is the new president, Antonio is the new treasurer, and they haven't selected a new secretary yet. I'm just going to do 2 here to keep it simple for us. Okay, and so we would like the 25,000 for Chen Yao to be Yin Chao to be showing as a administrative receivable, and the Antonio's house to be shown as administrative receivable under houses. And um, uh, I want to make sure, and also for compensation, the compensation, and this we want to be clear on, the administrative compensation as of the end of February are these 2 figures, the new people, but also these 3 figures from January. Remember, we want administrative salaries for the administrators while they were administrators. So January, these were administrators. And February, these were administrators. So the right administrative figure would be the total of all 5 of those figures. And so there. Now let's, just to make sure that you understand it, we were putting everything we see on these pages here is simply something I have done to help you understand the situation. You do not make the reports that you're looking at right here. This is just to help you understand the background information. All the accountants have to do is to record an entry into that memo account for $1 for these two characters here. And I'm going to run over there and do that real fast. So we're going to record into that memo account for those two characters. So I go to my LE, ledger entry. Okay, JV, do this real fast. All right, and this is admin, employees, February. All right, we go OK. And we'll make sure that we get the accounting period to be February 02 for 2014. That's February of 2014. And we're going to pick up the Z account. And let's see if there's anything else. So the function is the first one that Brother Chow is a president, new president for the, and pick up Chow here. Excuse me, Brother Chen. All right, and we get $1, and it's debit, and a new line, and we do the same thing for the other. And this other character is the treasurer, and I believe that was Luna. Okay, $1, debit. We can go to grid view, take a peek at what we've got in there. Looks like it's everything is just fine, and we post it. All right. And a JV would come up. It would be filed with all the other JVs, and you're good to go. All right, so now let's go back over and run our financial statements over here. And for February, and we run it. All right, and so to see if we've got it right, we want under car loans 25,000 to be shown as administrative employees, and under housing loan 280,000. So let's take a peek and see if that is what we have. So we come over here to notes receivable, and we have housing loan 280,000. That's Brother Luna's housing loan, and the 25,000 for administrative employees for car loans, Brother Chen's car loan. And so, and then it's a little more complicated to take a look at administrative personnel and their expenses, but you can see that in January we have these two employees, Jenkins and Hubbard or whatever it was, and these three employees rather. And then in February, we have these two. And so the right amount is all five of these figures. And so roughly was this about $30,000 of administrative employee expenses. But what matters and what's printed and handed out at the board meeting is this right here. And you could see administrative employees of 30,000. And if you saw that figure and someone says, what are these figures? Or you're wondering if it's correct, then you can come over to the worksheet and see what employees have been included in that figure. Okay, and if you want to go back and get the comparative figures working right, it's very simple. Okay, very simple. All you have to do is go and write a JV in all of these previous months of last year, and you will get comparative figures coming up. Do not be alarmed by this 1844 up here. As you can see, as we go through the year, that this thing sort of starts populating. And so there you go. That's a lot simpler than what we used to have to do to record and separate out those administrative employees. You just got to remember to do that journal entry at the end of every month for administrative employees. And if you want to do it quick, you can do it as a ledger import. Well, this is the end of this video, and I really am proud of the SunPlus network for coming up with this solution. You know, you could see the nature of what we are doing here because the fundamental engine to make this work was created by the bright young men, and I think it was just young men at Inter America Division, but to put it into such a slick arrangement and make it work really well, you could see Siri there in Madagascar and South Africa. So the making this thing a reality and it not being a big complicated issue for us at all. So I am very pleased with both of their contribution and the way that everyone in our network works together.